This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, February 19th, 2016. Euro dollar. So although the euro's pulled back in recent trade, while the market holds above that previous breakout area, that previous resistance turned support at 110.60, there is still risk for a higher low ahead of the next major upside extension. At the same time, if the market establishes a daily close below 110.60, that would suggest that the broader downtrend is ready for a more meaningful resumption, and we could see an acceleration of declines back down towards the 107 area in the days ahead. Sterling dollar. So cable is hovering just off those recent 7-year lows at 140.80, and it's difficult to determine whether the market has put in a lower top now by that recent recovery high at 146.68, or if it still wants to correct higher before resuming the broader downtrend. So today, the key levels to pay attention to above and below are that low that we saw on Wednesday, which came in at 142.35, and that high that we saw on Thursday, which comes in at 143.95. A break on either side would help establish a clear directional insight, with a break below that low opening the door for probably a retest of 140.80, while a break back above the high that we saw yesterday would open the door for a move back towards that recent high that we saw all the way up at 146.68. Dollar yen. So dollar yen has seen a shallow recovery in recent trade, with the market stalling out at 114.88 about ahead of this latest pullback. At this point, that stalling out does suggest a potential lower top at 114.88 ahead of the next major downside extension below those recent multi-month lows at 110.98. If we do break below 110.98, that would open the next measured move downside extension towards the 107 area further down. At the same time, a break back above 114.88 would open the door for a move back towards some previous support turn resistance in the 115.97 area. Euro Swiss. So Euro Swiss has seen a bounce out from recent lows at 109.50, and the market overall remains very well supported on dips, with the recovery structure intact and favoring additional upside beyond recent highs at 112 and towards 114 eventually further up. At this point, setbacks should continue to be very well supported above 109.50, while ultimately only back below 109 would really compromise the immediate bullish outlook for Euro Swiss. Aussie dollar. So Aussie has been well capped into recent rallies up towards the 72.50 area, and overall the broader downtrend remains intact. We have seen some choppy, directionless trade over the past several months, but again, the market is favored to be well capped ahead of the next major downside extension to retest those recent lows that we saw, those multi-year lows from January at 68.27. Only back above 73.85 compromises the bearish outlook for Aussie. Dollar CAD. So dollar CAD has seen some sharp setbacks in recent trade, with the market welcoming an overdue correction from near 13-year highs at 146.90. But at this point, it's time to start thinking about a resumption of the broader uptrend. And if you look at this chart, you can see an uptrend line going back to from those May 2015 lows. This does still mean, though, there is room for a move lower to test that trend line, which comes in around the 135.50 to 136 area. Ultimately, setbacks should be limited to the 135 area, ahead of what should be the next major upside extension and a bullish resumption back towards and eventually above 146.90. Kiwi dollar. So Kiwi has been very well capped into rallies, this time most recently up towards the 67.50 area, and the market could be looking to carve out a lower top ahead of what should be the next downside extension. A breakback below 63.47 would be required to open the door for an acceleration of declines and strengthen the bearish outlook, but ultimately any rally should continue to be very well capped, with only a breakback above 69 to compromise the bearish structure. SPX 500. So although we've seen a bounce in the S&P 500 in recent trade, the market should continue to be very well capped into rallies, particularly ahead of that previous support now turn resistance at 1993. We did see a major structural shift in this market following a break of critical support below that August 2015 low several days back, and this does put the focus on the downside, suggesting this market could see deeper setbacks over the coming weeks and months. A breakback below 1808 would confirm and open the door for a move down towards next key psychological barriers at 1700 further down. Gold. So gold has seen a major structural shift over these past several days, with the market breaking out above 1200 and now suggesting that we could see an acceleration towards the 1307 2015 high further up. At this point, look for any setbacks to be very well supported below 1200, ideally in the 1160 to 1190 area, while only a break back below or a close below 1160 would take the immediate pressure off the top side. Until then, don't rule out the possibility for a move higher, again back towards that 1307 January 2015 high.